2015 was an interesting year. It started off really, really slow. I mean, we had flat growth in the first quarter. And what's interesting about that is this has actually happened for the last 3 years, that we've either had zero or close to zero growth in the first quarter. And so it's kind of interesting that each of the 3 years, 13, 14, and 15, first quarter was abominable. And then second was a little bit better, and then the third and fourth quarter in each year was pretty good. And the same pattern was in 2015 as well. So as the year went on, each successive quarter got stronger and stronger and stronger. So overall we had a good year, but again it was this kind of cyclical pattern, not so good in the winter, and as spring comes around things get better, and as the fall comes around it really looks good. It's kind of a strange pattern, but it's been a pattern we've been experiencing now for several years. So overall it was a good year. We had about just under 87,000 jobs generated in the state's economy in 2015. It's not as good as the previous year where we had over 100,000, but it's still a pretty good year for jobs. Virtually all sectors had experienced job growth in 2015, and overall job growth was 2.1%, which is pretty good number. The unemployment rate, started the year below the U.S., wound up rising above it, and has stayed above it through all of 2015. It's about 0.5% higher than the U.S. rate at the close of the year. That's a little troubling, but we have to understand that it isn't because North Carolinians lost jobs during the year and therefore the number of people unemployed went up as a result of people losing their jobs. That's not what happened. We had a year where the number of people employed was going up, and so was the number of people unemployed. Most of the increase in the unemployed came about as a result of people coming into the state, big in-migration, to take advantage of the economic opportunities that were here. And when they come in initially, they come in unemployed, and as a result of that, that tends to generate that rise, if you will, in the number of unemployed people from external sources as opposed from layoffs internally. One of the things that we don't understand is how actually strong this growth has been during this economic expansion. When you look at the real numbers, you find out that this has been actually a pretty solid period of time in our economic history. So this recovery began in July of 2009. Recession was technically over at that point in time, and it's been going on for the last 80 months. Now, to put that length of time in perspective, the National Bureau of Economic Research, which is the keeper of the business cycle, they're the ones that decide when we go in and when we come out, has recorded since 1854 33 economic expansions. This expansion that we're currently in is now the fourth longest economic expansion of all time. Only 3 have been longer. And I think that gets lost a lot of times. Right now we're sitting at an unemployment rate nationally of about 4.9%. That is pretty close, if not at the full employment rate. And as a result of that, it would be hard for us to push that rate much below that without having inflationary consequences, which would not be good for other parts of the economy. So right now, we're at a point where, to quote a movie title, is as good as it gets. It's really not going to get a whole lot better. The trick right now is to try to keep it at that pace. And it looks like 2016 will be at that pace. We should see about a 3% growth in GDP in North Carolina. Compare that to about 2.7 for the United States, just a little bit stronger than the U.S. A lot of that has to do with the fact that we get in-migration of labor, and therefore the economy can grow because our labor force is expanding. Couple that with probably adding just under 80,000 jobs for 2016, and it should be a year that, in a sense, repeats 2015. And I think that's, at the end of the year, the North Carolina unemployment rate should be a little closer to the U.S. rate than it is now, probably 0.3 off of where the U.S. rate is, in the low 5%, 5.3, and it'll be another good year. And if that forecast in fact plays out, this time next year we'll be looking at not the fourth longest, but the third longest expansion of all time.